All right, guys, we'll start in about 5 minutes, or excuse me, 2 minutes. All right, team, what is going on? Chuck with Traders War Room. I'm back at you with another video. We are doing a live stream for the lunchtime crunch. Guys, give me a few moments of your time and then we will get started. Without further ado, let's go ahead and get into it. I got some updates that I want you to get out, and I want you to know that TWR has your back. First of all, check out our text message platform. Guys, this has been blowing up, man. We started this last week. This absolutely took off, man. People are loving it. You get your text message alerts via text message right to your phone. The algorithm that we're utilizing for the text message alerts is fire, and it is doing extremely well. We utilize machine learning and artificial intelligence so that the algorithm is consistently trying to get better and better and learn the market as it goes. So it's one of a kind type of platform, and it's definitely, you can look at it right on the website, traderswarroom.com. We want you to go check out our TWR Trading University. Listen, digital courses online that mimic traditional college online courses, except for their trading and investing. Guys, check out what we have, man. These are anywhere between 8 and 10 weeks of curriculum that you can do self-paced. They're videos. We have a discussion forum. We have homework, course critiques, everything that you need in a one-stop shop course. And guess what? Once you become a member and you purchase your course, you are now alumni. So any updates to that particular course, you get for the lifetime of that course, guys. So check out the university. Definitely something, if you're interested and you're serious about your trading and investing, the TWR Trading University is for you. And finally, we want you to experience the TWR one-on-one mentoring. I've been getting a lot of direct messages, and a lot of people are asking for assistance and help. And I'm glad to give, onesies and twosies, a little bit of information via direct message. But man, when we're going in depth on a direct message chain and stuff like that, I got thousands of people that I got to message and things of that nature. We can't just do it via direct message. I understand what you guys are trying to do. You're trying to squeeze as much as you can for free out of the subject matter experts, and I got that, man. But if you're truly wanting to invest in yourself, you gotta pay the piper, man. You got to get one of these mentor sessions so that we can really focus on you as a trader and investor, strip back the onion peel, and we can get to the bottom of your trading personality and really develop a strategy and refine current strategies that you have so that we can make you consistently profitable over and over and over again. And without further ado, guys, remember our 2023 campaign is we want to make that market bend that knee. Traders War Room, we bow to no one. And without further ado, let's go ahead and get into it, guys. I'm going to use Webull for the application. You guys should be able to see my screen here once I pull it up. All right, guys, Webull. All right, listen, those of you that are on TWR, we're going to start with QQQ. Okay, so last week, let's review last week real quick. All right, last week we saw this. This is what we saw last week. Okay, all right, we saw this dump city. Okay, and yeah, we rode puts all the way down, man. Made some killer money. Saw a little bit of resurgence, but this is what you call a classic two-leg strategy, man. You get the dump, 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 dump. You get the try to recover, but it just can't quite make it. I mean, it couldn't make it back up to the threshold, right? Had it made it back here and closed above this area, we might have been able to reverse, but it didn't have enough steam. Okay, so we weren't able to make it over our shorter moving averages and specifically over our 50-day right here. And we ended up coming back down. All right, so move forward. We gapped up a little bit, right? Okay, got it. We're looking, but then in pre-market, it kind of went a little down. And this was mainly because of some of the European markets that started off pretty shaky, right? And, we had some volatility. I mean, you can see the broadening here. When I talk about volatility and broadening, what I'm talking about is exactly here, okay? We spike up, we wick out, we're coming down, we're wicking, okay? But then we start to get our trend, and then we start to get our flow, and we're starting to really make some headways here, okay? And basically, what we got to understand is when we're talking about these stocks, okay, we're talking about sectors specifically, the bigger names, everyone has a price threshold, okay? Specifically with Q, right? What are we talking about in Q, man? Well, we're talking about the Magnificent Seven, okay? We're talking about those big tech names that are really moving the stock, and everyone has a threshold, okay? Apple's at 190. People are like, maybe not. I'm not going to get it. But Apple starts creeping around that 175, that 176, and it starts hanging out down there. People are starting to be like, you know what? This is kind of appetizing right here. I might want to nibble into this position because at 190, I didn't like it so much, even though I think Apple's going to like 210, right? But at 190, I don't like it so much. But since I have a price target of 210 on Apple and we're now at like 175 or something, now we're talking about a significant jump in the shares, man. I'm going to go ahead and nibble in. And I'm thinking like kind of like the bigger money, the big investors, right? So we got to understand that NVDA absolutely was getting demolished. We'll look at that chart here in a second. People, once it gets down to a certain threshold, people are like, you know what? I missed the NVDA train last time. I'm not going to miss it this time. And they start piling in, start nibbling the position. And once you start seeing it hold those support levels, then they start coming in a little bit heavier because now they kind of feel a little bit okay that this is a level where we're going to have a little fluctuation, but for the most part, this is going to be the support level that we have. And now we can bounce from here and go on to the next resistance point. So QQQ doing real good. Our calls are definitely making some money for us today. We're looking at Meta was one of the charts that we had on our watch list and something we were paying attention to. Meta starting to get that M formation though. Okay. Anytime we see the sideways M, we're a little leery of it though, but if we can keep the pressure, I do like Meta for a potential push and a break towards 305 here. All right. Right now, the RSI is saying that we're kind of oversold. All right. We're still kind of selling off. I'd like to see the MACD. I'd like to see us cross to the upside before we go into a long position. Remember, I like to have that 5-3-1 strategy. Okay. Focus on 5 stocks that you like. All right. We want 3 reasons why to push to buy. Okay. Could be some volume, right? Could be a chart setup, a pattern setup, whatever. But we want those confirmed with some indicators. Okay. Not just on the main chart. We got to have some sub indicators that help confirm it. MACD, RSI are the classic ones that have tested the time and have still been around, man. These are the ones that most people utilize, and there's a reason why, because these are the ones that have been around for the longest and they still produce and perform time over time. Okay. Uber. We went short on Uber and made some killer money, guys. Uber was a great trade. We saw Uber last week. We knew Uber was struggling to hold these levels. And anytime Uber is one of those classic ones, anytime Uber's price action is below the 50, we want to take the short position. Okay. Remember this for a future thing. Anytime you get a nice close below the 50 on Uber, you want to take a short position because Uber likes to trend usually in a couple day pattern below the 50 and will trend for a little bit, and you can make some serious money. So anytime we're below the 50, we're taking a short position and we're riding it down. We're still below the 50 here, but we're starting to bounce on it. We'll go ahead and once we cross the 50, we'll take a long position because Uber also likes to bounce anytime it crosses above the 50. So Uber's a fantastic one that we can trade often. and we can make some money on multiple times throughout the week, specifically just watching it based off of the 50. We also got it on a longer time frame here, looking like we're trying to find some support down here, potentially looking for the bounce play. And if we cross that 50, we'll go ahead and take a long position and look for a swing trade pushing out 1 to 2 days or so. Amazon. We knew Amazon was going to fall, guys. We got to push out a little bit on Amazon, because Amazon was one I've been telling you guys about for a while. All right. Okay. And I even got the chart here. Okay. Amazon, we were hitting this area, right? This top level. And you could tell I've been doing this chart for multiple times. We're hitting this level. And I was telling you guys, man, we're hitting buyer's exhaustion. We're hitting buyer's exhaustion. We can't continue going. Now, we had a safety net. If we did break out of this, we're looking at 150 was our next point. Okay. That was where we were going to take some positions and go long towards that 150. But we didn't, we had the short position, excuse me. Gotta sneeze. Oh, goodness. Oh, sorry. All right. But we knew we were hitting this buyer's exhaustion, okay? Because every time we came up to this number, we kept wicking out and we kept coming down, okay? It was just a matter of time. So we went ahead and said, you know what, 145, that's our limit. If we cross above that on like a 15-minute chart and we start to close above that and we can hold that level, we'll start to look for the swing towards 150, but we couldn't do it. So we started going short, and ever since we started going short, man, we were making some decent money, man. And it's been just following ever since. Now we're starting to get some broadening. So we're looking at the 2-leg strategy here, down 1 leg, consolidating, also broadening out. So I'm going to take away these. I want you guys to look at this. Okay. We're broadening out on a further out time frame. And when I'm talking about broadening out, all right, oops, I'm going to use the extender. All right, broadening out. So we're here. All right, here, right? And we're going to do that again. Here, okay? That's what we're doing, okay? We're broadening out. So we're getting wider, all right? We started off tight in consolidation. Now we're getting wider. We'll come up, we'll come down, we'll come up, we'll come down. Most likely we will not breach unless we get some sort of catalyst news to the upside. Now, FOMC, that goes hot. If that goes dovish, Amazon will reap some benefits, right? You can definitely rest assured if we get a nice bullish push off the FOMC on Wednesday, Amazon could breach this point and go up there and attack that 150. But I think Amazon is kind of struggling a little bit. I think people are starting to take a little bread off the table. And I think that we're going to continue to go lower. And I got a target right here. I think that we're going to hit about 135, 134. I think 135 is a safe bet. If you wanted to do a swing trade, I'd look out 2 to 3 weeks, maybe a month if you got the money to afford it. And I'd go at the money, in the money as much as possible, with a target of about 135 being your target zone. We could even push it a little bit, 133, 134, but 135. Once we start getting that zone, we're going to start wanting to consider taking some profits, because that is where the money's starting to come. So broadening out, I think we're going to reject coming down, and I think we hit that 135, 134 area sooner than later. AVGO. Let's get into AVGO. AVGO took off like a firework. Now we've been watching AVGO. You can see I watch all these stocks, guys. You can see that we've been watching this from the bottom, and we were waiting for this break. AVGO now, since we have this strong break out of this position here, we're looking like we're going to head towards that 870. Okay, 870 is probably where AVGO is going to go. Now it's sensitive to the overall market, specifically the semiconductor market. So if AVGO kind of lags a little bit, we could see a little bit of some volatility. But as the chart suggests right here, if we can break over and start closing on the further out time frame right here, this is the 15-minute. We're good on the 15-minute. All right, we're over our moving averages. You know, everything looks good for continuation. We need that on our further out. If we can get these close above our shorter moving averages, specifically across, if we can get the short EMA crossing over the long EMA and we get a close above that 50, guys, that's like a golden setup. Okay, we need to go long towards 870. So we're watching this. Likelihood of us hitting 870 sooner than later is high, unless we get some sort of event that overall pushes the market down, which we would then fail and we would head back down to the 845 area because this is our range. We got this 870, 845 area, and we've been in that range for a minute. You can see right here, so ever since we kind of dipped below here, we've been in this little rangy area. We popped above it, but we weren't able to hold it, came down below it, didn't want like that area either. And so we've been kind of just stuck between the railroad tracks. MU, we like MU. Oh, look, MU looks pretty bearish right now. MU might be an opportunity to go. Let's look at a day trade. Let's look at a day trade. I think we might be able. It doesn't have enough volume. No, I was thinking about trading, but MU doesn't trade like AMD or NVDA. I was thinking about a day trade. I wouldn't be opposed to doing a short swing trade, but I want to see what MU does in power hour. Looking at the chart right here in MU, we've been consolidating for a little bit, right? We popped up, we came back down. Most likely we're going to reject this consolidation area and probably head back down to our last area of consolidation. Notice we had kind of this table set or this step ladder, right? Up, consolidate, up, and then with long consolidation. Okay, we failed this area here. Most likely we're going to probably come back down to about this area. I'd say about 68, maybe 68, maybe 67. And that'd be probably the area where we'll look to see if we can gather some support. We already had some wicking coming here and some negative sentiment. We've held those areas. So if we can't hold this area here and we can't keep our moving averages, we end up going below our 50 on the 4 hour. I would go short swing trade on MU, and I would expect a target of about 68, 67. Triple M. Looking like we're finding a little bit of a push at the bottom. However, probably a gap fill play that we could do on a swing trade towards 100. Triple M. Yeah, looking like it. We can probably get a gap fill trade. I don't know, Triple M trades kind of odd, specifically now that they got that kind of that deal with the government going on. We do have this, this little jackhammer thing going on here, right? So we could see a little bit of a slide coming down like this. This was 107 all the way down, kind of bumped up a little bit, kind of holding this area, but we're kind of wedging, right? We got this little wedge forming, coming here. Right. Got this little wedge forming, right? There we go. We could easily fail this wedge and probably come to the downside to gap fill. That's what I would assume. We probably, because we almost gap filled it here with this wick. We didn't quite get it. I could see the gap fill come down about a $2 push to the downside. This might be a good opportunity for a swing trade short on Triple M. CRM coming out. CRM's flagging on the 15-minute. Could get a nice little push. It started wicking hard towards the upside, but it looks like it wants to push. CRM could be a decent little push for about $1 move, maybe a $1.50 move to the upside here if we get this. Volume push, it's above all three of its moving averages on the 15-minute chart, but we got a little divergence. RSI is saying that we're heading into a sold off territory, looking to potentially cross. That'd be good if we cross there. MACD is starting to get tight, so we're looking for the trend reversal here, most likely to the upside. So CRM might be a good trade. Let me look at contracts real quick. We might take a CRM trade. Let's look at calls. It's the volume. Where's one? Why don't I got the volume? Open interest. Yeah, I got that. I want the volume though. Yeah. Okay. I don't know why it's not giving me. Oh, Resets defaults. Oh, there we go. There we go. Yeah, where's volume? There we go. Okay. Looks like here's the volume, the big one on the day. Okay. All right. Let's look at that chart again. All right, you guys are hearing this live. Okay. Hey, we're gonna do this trade right here. I'm gonna take this trade. CRM 22 September, and I'll post this in my chat group. Oh, I like this setup. Dude, all these bumping. All right. CRM 220, September 22nd, 220. We're going to go ahead and take this call 58, just going in with one. All right. Just going in with one. All right, I'm in. I'm going to go ahead and post that trade into my chat group, to keep track of it. Everyone who's a TWR market warrior, you guys know that. You guys can look at my channel. So we're in that trade right there. Yeah, we'll rock that one out. Stop loss, we'll go ahead and do a stop loss of 25 on that one, just in case we reverse hard, but we like that one. So we got an average cost of 56 on that one. So that was a good trade. Okay. So we're in that trade. Yeah. All right. Got a little live. It's never a bad idea to do a live trading lunch crunch and actually do a live trade, right? Yeah. All right, we got that one. All right, shop. Woo! Shop dumping. But I like shop down here at this price, guys. Look at this. Look at this price. We're starting to hit that meat and potatoes section. I think we bounce from here. I think this is a big dump. Okay. I think we can bounce from this. I think we get a little support. I'd like to see MACD cross. I'd like to see the MACD cross to the upside on a further out chart first, though, before we go long. Right now, I wouldn't touch this one because it seems to be potentially a fallen knife. You might even be able to get a short trade off of it, but we're kind of wicking to the bottom, right? Kind of wicked out a little bit, about $1.50 wicking out. You could get the push down lower, but I think we might be able to find some support. This might be a good day trade opportunity as well. Looking like we're wanting to push and about to cross on the 15-minute on the MACD. So if you're looking for a decent day trade, as long as we hold the bullish momentum, shop might be something that could get you a little opportunity, maybe from 60 to about 61.50. You might be able to get a dollar movement on this one. But on a further out swing trade idea, we want to have a couple things happen first. We want we would like a bullish close. B, we'd like to have an RSI cross to the upside. We'd like to have an MACD cross. Okay, we want 3 reasons why to buy to the upside. Right now, we got multiple reasons to buy the dip, but it's already been dipping, so we don't want to just chase the knife on the way down. Crowd looks like it's popping. Hey, 170 inbound. Another trade opportunity here. Look at this. For further out chart here, we're approaching that level. All right, we can bring this down. Let's go ahead and chop this chart up. Let's look at our levels. We're getting you guys a whole bunch of training on this one. We're gonna break down a chart. All right, top level. Remember, we want meat and potatoes. All right, meat and potatoes. Go ahead and kick that one here. We like this here, right? Little potentials, right? Meat and potatoes. All right. Let's go ahead and grab the bottom. All right. I like color coding stuff, right? All right, let's go ahead and get our 50-50. Boom, right there. All right. All right. Hey, here we go. You see it over here? We close. Hey, we stay above this line on a 15-minute chart. Go ahead and take the long position. Expect this to move towards 171. That's a high probability setup. If we close below this line and we start to fail, go ahead and take the put towards 165. You could go 164, but 165 is just being a little more conservative. 164. So yeah, there's our setup. We could adjust it a little bit too, because we aren't exactly, we're all just eyeballing, eye of the beholder right here. I mean, we could use an actual number scheme to get the actual numbers, but we're waiting for the cross to the upside here for it to go long. But listen, all these bots and stuff like this, they're fantastic opportunities for people to utilize them for tools. But if you can't chart, old school trading, we used to grab the charts, we used to print it out, grab the charts, used to use the pencils and the rulers, and we used to chart our lines out on paper. Okay, thank goodness for computers, we got the lines like we're doing just now, right? But if you guys are just utilizing apps on your phone and calculators and all this stuff, which is fine, you're only going to be a certain type of trader. Though you got to be able to get into the charts, you got to be able to put your own lines on things, you got to be able to look at the stock yourself, got to be able to read the stock and kind of look at the levels and tell it for yourself. Okay, that comes with experience, right? That's being a well-rounded, a full trader. All right, so crowd looking at it, I'll let you guys know we close on a 15-minute chart above this orange line. I'm gonna take a long position, and I'm gonna go out towards expecting this to move towards 171, 172. That's the game plan. If we stay below this line and we even fail one of our moving averages, specifically if we cross one of our moving averages, or we get an indicator down here that crosses to the downside, I'll probably take the short position and I'll go towards 165, 164. What else we got? Oh, I wanted to look at XOM. Hang on. I'm going to do one more, guys. XOM for you. All right, we're losing a little bit of steam on XOM. That's okay. We're long XOM. XOM likes to pop and then drop. What I like about it, looking out further, though, is that we're still continuing to push a little bit. So I think XOM, as long as we hold energy kind of bullish, I think XOM could pop back up and retest. I mean, we've come up multiple times. We retest this area, then we drop, and then we retest that next area, then we drop. Next one, we pop. We might be retesting, 120. So that's my idea here. I mean, styles tend to repeat themselves. It's happened multiple times. Popped here, dropped, popped, dropped, popped, dropped. Hopefully we pop, right? And then we're able to get our exit on our swing trade that we have. Q's starting to cool off a little bit. That's okay. We're looking for a little bit of cool, as long as we can hold above the line, right? We want to stay above our longer moving average. As long as we do that, we'll be good probably in our trade. Hopefully we can get a swing trade out of it, looking to capitalize as much as we can on the contracts we got. We averaged down on that trade and got some significant contracts there. So, all right, guys. Oh, let's do Tesla before we roll, because I know you guys love Tesla. Tesla looking pretty weak here. I'd be going short on Tesla. I'd be going short, looking for that gap fill. I'd be going short, guys. Tesla has been extremely bullish. I mean, look at that. Extremely bullish here lately. It's time for a little bit of cool down. I'd be looking for the short position. Not saying Tesla's terrible or anything, but I'd be looking for a little bit of downward pressure from Tesla, taking some bread off the table, and probably looking to potentially gap fill this on a swing trade, and then probably find the support and take off from there. So looking pretty weak right here. Puts will probably be a good opportunity to make some money on a Tesla trade. And they made money here, right? You'd want to wait for confirmation coming out of consolidation, but it looks like we're about to break our moving averages. We do that on a 15-minute chart. That's pretty good confirmation to the downside pressure. I would also say probably we want to break signal here, at least one of our sub indicators. We want to get some sort of cross, SMI, MACD, or RSI, some sort of cross, give us a couple reasons, but looking pretty weak, looking like we got some downtrending pressure. And I could see Tesla hitting a new low of the day today, coming out of this consolidation. All right, guys. Hey, Chuck with Traders War Room, thank you for coming to the lunchtime crunch. All right, this will be out on the YouTube. I appreciate you guys. We got some things going on with Traders War Room. Remember, we got that one-stop shop type of mentality. We also looking at that war zone mentality, man. The stock market, as you can tell, it's a battle zone. All right, stocks and sector, those are our battles. The market is our war zone. Okay. if you can relate to that philosophy and you're feeling what I'm putting down, all right, come join TWR and come trade with the Bulls, man. We'd love to have you be part of the membership over there. We got a great set of team. We got a great set of analysts, and we got a whole bunch of internal analysts that you're only going to find on TWR. Okay. All those other, popular people out there. I mean, I can name them off. You guys know who I'm talking about. I mean, they're on every Discord server, just like me, right? But you're only going to get certain alerts on TWR, and we got the best. All right. Without further ado, guys, you guys have a great lunch. I'll catch you next time. And as always, if you're ready, follow me. Let's go to war.